What's up guys, Kevin Cage here with another crypto update. We got some big news today. So first up for XRP with the DIFC, the Dubai International Financial Center is the leading global financial center in the Middle East, Africa, and South Asia region. Now check this out, with a 20-year track record of facilitating trade and investment flows, comprising of 72 countries with a combined population of around 3 billion people, that is a huge chunk of the global population, and a nominal GDP of approximately $8 trillion US. Now of course, this is a combination of 72 countries, but if you put this in perspective, the US about 26 trillion and China 17 trillion, it is really right behind them. And same with BlackRock. And today for XRP, the Dubai Financial Services Authority, the DFSA, approved XRP under its virtual assets regime, allowing licensed firms in this DIFC, this financial center, to incorporate XRP into their virtual asset services. So Ripple, the company, back in 2020 got an office in Dubai, and this is a really big deal, not just for XRP, but for a variety of digital assets. And I'm sure some of you guys have already seen some of those viral clips on social media of Ripple being marketed everywhere in Dubai. Since the DFSA opened up external applications, XRP is the first virtual asset to be approved by the regime. XRP joins Bitcoin, Ethereum, and Litecoin as the assets previously approved under the DFSA's virtual assets regime. So we know XRP is not a security in Japan, the UK, Switzerland, the US, and of course Dubai. In the UAE, or this entire MENA, even South Asia region, is massive. And unlike the US, this Dubai Financial Center, the independent regulator, is committed to the long-term development of the crypto payments and fintech ecosystem within Dubai. Dubai also has VARA, the Virtual Assets Regulatory Authority. And this regulatory authority was in partnership with DLA Piper, a global law firm on Hedera's governing council and also a Casper partner. And DLA Piper's Toko, the tokenization engine, was just in the video we mentioned yesterday with Ripple, working on that pilot project for the electronic Hong Kong dollar with Fubon Bank. So Dubai's listing of XRP has the potential to unlock new regional payments and other virtual asset use cases on the XRP ledger. We also know that Ripple is the official tech partner for the National Bank of Georgia's Digital Gel or GEL CBDC pilot. And the next steps are the National Bank of Georgia and Ripple collaborating for project execution and gradual rollout. And this pilot program will be using Ripple's CBDC platform, allowing governments, financial institutions, even central banks to seamlessly mint, manage, transact, and redeem CBDCs, and this technology is powered by the XRP ledger. We have Raul Pal right here, an awesome macro investor. In the previous video, we showed the correlation that he was highlighting between Bitcoin and the M2 money supply as liquidity increases and how the cycles are very correlated, and we're seeing that rise now. He says, technically speaking, Ethereum is a gorgeous, gorgeous chart, showing a wave 3 to take Ethereum over 3,000. Of course, this guy less than a 2x. This is one of the biggest assets in this space. As Ethereum and both Bitcoin pump, the other alts will follow. And there are a lot of valid concerns, but there's also a lot of FUD in the Ethereum ecosystem. So staked Ethereum has been growing, however, stake centralization remains a major risk. And the thing about Ethereum is the network capacity is increasingly overloaded. I'm very curious to see how it would do during an actual bull run or even Bitcoin reaching an all-time high price. If appetite for staking on Ethereum does not slow meaningfully over the next several months, the size of Ethereum's validator set could be problematic for the blockchain. So if Ethereum runs into problems, other layer 1s are going to take the cake. If Ethereum does do a big crash in the future, the network is overloaded, or other issues in terms of stake centralization, we could crash and that could affect the market. But in my opinion, that gives the huge opportunity for other layer 1s and other altcoins to actually take some of that volume and solve these real problems where they're actually built to properly scale. If we see the Bitcoin price chart go to an all-time high price, actually over 100K, I do believe Ethereum can reach 6,000 to 8,000. I know that may sound crazy. Bitcoin's last all-time high market cap was 1.27 trillion and Ethereum's was 570 billion. So it was well over $500 billion. I do believe that Ethereum, with success, with adoption, with the volume of a bull cycle, can reach a $1 trillion market cap. I love that Ethereum has a huge ecosystem of DEXs, wallets, ERC20s, tons of liquidity, and all types of applications. I just don't think that Ethereum is going to be the one that solves enterprise utility at scale, and I believe there's going to be many other projects that actually solve this problem a lot better. And looking at price charts really quick, we have HBAR on the left, on the weekly, and on the right we have Fetch. So we've had several assets already draw substantial retracements, whether it's a 3.5 or even a 10x retracement like we've seen for Fetch wick to wick. We've seen Bitcoin, XRP, some of them above the weekly 50 MA, this yellow, and then others even going far above it. Here we have Render retracing almost a golden cross setup right here on the weekly time frame, which would be a really big deal, and we can see challenging the previous highs. And I'm just scratching my head watching a variety of assets still at their lows, not breaking out of accumulation. We have assets like Injective, although it is very deflationary in terms of its tokenomics. This thing has flown almost 1,200%, so well over a 10x. And we can see it already drew this golden cross as it did continue upwards, and that's a similar position to where render is today. We have stacks right here. It also drew over 500% or over a 6x. It came back down, but I would take anything at this point. This 2+ year bear market where, Algo, Casper, all these things are just sitting at very low prices down here, and we're struggling to even get above the weekly 50 MA right here. You have XDC doing really well, backtesting the weekly 50, coming back up, consolidating, and then it even wicked up the other day pretty high. So I ask myself, going into a bull run, Bitcoin with the potential to go up to 48K or even an all-time high price, I believe a lot of assets are going to follow suit. I wish I could make asset prices move, but this bear market has completely humbled me and we just have to wait our turn. Looking at 10 years of price history, there are always leaders and laggards in this market. Going into a bull run and Bitcoin going to an all-time high price is that huge potential to see those alts do a 3, 5, 10, even 50x return. And Bitcoin going to 100K or even to an all-time high price, that's a 2x. I'm not really interested in that ROI. Now, if you hold Bitcoin, awesome, maybe ride that up and try to take those profits as Bitcoin's pushing into highs or wherever you think the top is and roll it into alts, because I believe that alts have a much better ROI, those that are successful. And just being in accumulation at lows, not any crazy retracements. I would even take just a big retracement into a crash or a blow off top like ZIL did last year. Now looking at the HBAR price chart on the weekly time frame, so these purple rectangles are fair value gaps and sell side imbalances. During a retracement, when Bitcoin actually starts moving a lot higher, I believe we close these gaps conservatively. On CoinMarketCap, looking at the market cap all-time high was around 6.5 billion, but if we look at charts.cointrader.pro, Hedera's market cap was roughly 7 billion, as you can see right there. Considering the increase in circulating supply, if HBAR reached its all-time high market cap that it reached back here when HBAR was 57, even 58 cents, at a $7 billion market cap, HBAR would still be just over 20 cents today, which is right around this fair value gap. And even if you don't believe that HBAR goes to an all-time high price, I personally believe that it is completely capable to create new highs. But before we even talk about all-time highs, I just want to start retracing and actually get back to previous levels that we're at in the past as this RSI goes up. And so for me, I believe the crypto asset class creates another all-time high, far surpassing the $3 trillion previous high. Now, if that happens, there's going to be alts that have dozens of billions of dollars in market capitalization. We know XRP's all-time high market cap, not this last cycle where we just retraced, was well over 140 billion. We have ADA 99 billion, Solana 77 billion, Doge was like 94 billion. So if HBAR today, or even with its full supply, reach that level, you're still looking at $1, $2, $3 potential. If Casper, with its circulating supply, its market cap being much smaller, reached what Sol and ADA did, that is $6 to $8 plus. So looking for that potential from their all-time low at 2.2 cents for a 50, 100x, in my opinion, is still possible. We just don't know which ones actually have that high success case. But I sure as hell hope that we're holding some. We can see Hedera's mainnet over 26 billion transactions, and its TPS is going up, currently over 2,000, which is a big deal. Some of the partnerships we've covered are massive. The ecosystem is huge. It is significantly further ahead than a lot of other assets, even though its supply is larger. So some people think because the supply is so large that it's actually going to cap its potential, but I think it's going to be here for the years ahead, where when you get enterprise adoption with sticky customers that stay with you for the long term, it becomes this flywheel effect. We also have Dubai Vara granting initial approval to the crypto firm WadsPay, and I'm sure you guys are familiar with WTK. And talking about Casper, we have Crypto Caesar, and I believe he's been in crypto since maybe 2016, maybe even earlier, so he's very familiar with the market cycles. I believe he's still calling for a 34x on Casper during this bullish cycle with Bitcoin going to an all-time high price. So he's calling for Casper to reach $1.30, 2024, 2025. Remember that Litecoin's all-time high market cap was 27 billion, Avalanche was 32 billion. The Casper prices for reaching those market caps would be over $2. Cardano or Doges would be over $8. And if Casper today surpassed over $1.30, we're looking at a market cap of 15 to 16 billion, and is that possible? Absolutely. But is it possible in a single cycle? We're still sitting at lows. We have a bunch of resistance above. If we can start breaking, closing gaps at 12 cents, get above 20 cents, then I'm going to be entertaining an all-time high price. We have an open gap at 43 cents. In the CTO of Casper Labs discussing the IPWE deployment that was supposed to be minted already, they said that it's going to be taking place very soon. The team is working on pushing the data into IPFS. So the raw patent data is stored on IPFS and referenced on Casper. So I'll believe it when I see it. I know this deployment is happening. I'm not giving out any dates. We've been talking about this all year. I'm sick of it. Now, investing in crypto, there's so many considerations when you're looking at the technicals and the chart and price potential, when you're looking at fundamentals, the roadmap, the code, the use case, live applications, proof of concepts. There's tons of considerations. And for all of these assets, they have different market caps, and there's different types of market capitalization categories. So for large caps, typically in the top 10 with a market cap over 10 billion. Now in the bull run, or at least last cycle, the top 20 had over $10 billion market caps. And there are pros and cons to holding all types of assets between large caps, mid caps, small caps, and even micro caps. So large caps, more established, there's typically way less risk. Not that they can't go to zero, but large caps are significantly less risky than small caps or micro caps. However, being that large, tens of billions of dollars in market cap, you may have less upside. We have mid caps anywhere from 1 billion to 10 billion in market cap. Today on CoinMarketCap, you might find mid caps anywhere from rank 10 all the way down to 40, maybe even higher. So since their market cap is smaller, they do have higher growth potential, but there's a little more risk than large caps. These small caps with success have much higher growth potential than the mid caps and the large caps. However, they could be less liquid, there could be higher volatility and more risk. And then microcaps, we're talking $5 million market cap, $50 million market cap, anything under 100 million. These are the ones during the bull run. You'll see different assets like PancakeSwap do over a 400x return. So these are the ones going from $10 million market cap and reaching $1 billion or $2 billion in market capitalization is insane. But the challenge is finding them and then finding ones that actually succeed and don't just crash down to zero. They might have the highest growth potential, but they have the highest level of risk and the lowest liquidity. And I'm all for trying to hit some home runs in this market. You have to risk it and take that chance, and I do think it's worth holding several types of these assets. Okay, let's get into the good stuff. With the probability increasing every single day as we're getting closer to a substantial market retracement or going into all-time high prices, we have to have exit plans ready. So we have to ask ourselves, what makes a successful exit plan for our crypto holdings during a bull run? And every exit plan is going to be different for each person, depending on the investor's risk appetite. What are they willing to risk? Are they going to want to be very risky to make a lot of money? Or do they want to play it safe and just try to get a 2 or 3x and maybe pay off their mortgage? Or maybe a little bit of both. They're going to hold some high caps that they believe will be here in the next 5 to 10 years and succeed. And maybe they'll have riskier plays with less capital. What's their time horizon? Are they trying to play the market and play a bullish cycle over the next 6 months? Or are they actually looking to have long-term exposure and hold for the coming years? What's their average entry price, which essentially determines how much ROI you can actually make? And what are their goals? Are they trying to ride the speculative hype wave that we see every few years? Do they want long-term exposure? Do they want to build real wealth? Or are they just trying to use this as a high-risk play to get some capital? And an exit plan is different for each asset. You could look at the project's price potential, you could look at the tokenomics, you could look at its market cap, and consider all of these things. You could look at their fundamentals. Do they have a sound community? Are there a lot of holders? How is the liquidity? Are there a lot of wallets and good infrastructure? Are they going to be around for the long term? Do you see them being small today and being a lot bigger during a bull run? And lastly, the actual performance of the asset during a bull run. And since investors are rarely able to buy the exact bottom or sell the exact top, if I have sold even within 10% of the exact top or even bought close to 10% of the bottom, it was complete luck. By just reading the RSI during a bull run, seeing other assets absolutely explode, taking a position, and within 1 day or even a week later it takes off. And during a bull run, it might be more probable with different assets exploding, volume coming to the market, you see the asset super oversold and it recovers. But for the most part, scaling out of positions is one of the most effective take-profit strategies. By having 2, 3, or even 4 staggered take-profit targets, this allows you to sell a portion of your holdings at different price levels. You're capturing profits as the price rises while also de-risking. And by setting staggered profits, whether you have 2 staggered profits to sell out of your position or even 3 or 4, it doesn't completely remove the risk, but during a big move or retracement or when different assets go parabolic like we see every few years, it gives you a better chance of at least hitting some take profit levels, even if it's only the first or second target. And it's a lot better taking some profit or all profit during a bull market when assets are up, because you're likely going to see a 90% crash and see it go all the way back down in the future. If you sold a position and it crashed 50%, you could buy back and double your position. If you sold a position and it crashed 90% and you bought back, you would 10x your position. So let's talk about how I personally set up my exit plan for my holdings with target 1, 2, 3, and even 4 if I have one. And if you haven't already, I highly recommend watching this video I uploaded 3 weeks ago, The Smartest Way to Track Your Crypto. You can find it on YouTube typing in Kevin Cage Merlin. Because with Merlin completely tracking all of my crypto holdings, tracking the cost basis, I can set up a specific exit plan for each of my holdings. So right here we have an example. During a bull run, I could set up to sell 75%, 50%, 20% of my holdings to capture some profits or get my initial investment out while also holding some for long term. For Casper specifically, I want to make sure I have some long-term exposure reaping in the rewards of 10% APY, especially with the potential of the asset's price being up 5, 10, or 100x in the future. And we can edit this to sell 100% of our bag or retain some for the long term. So if I want to hold 25% and decide to sell 75% during a bull run, now I can set up specific targets in this example and say that I wanted to sell 25% of my holdings at 20 cents. I can then add an exit target and sell another 25% at a much higher price, let's just say $1. And I think it's super important to play with the numbers and see what's possible and see what you're willing to risk. Maybe I want to do 20% here and then hold the rest long term, another 30% even higher at potentially a much higher price, but I'm taking that risk. Thinking HBAR goes to $1, maybe $1.50, or maybe even $2 or $3. So it automatically tells me how many coins I'm selling out of my holdings and how much I'm actually holding for the long term. And then we can see these numbers and see target return over 3,000%, so over a 30x return. Maybe you're like, no way, that's crazy, let's be more conservative, go to 40 cents, let's go to $1, and then even just $1.30. So that's a 1,900% or over a 20x, and I don't know about you, but I'm not in crypto to get a 2, 3, 5x with my actual exit plan with some of my biggest holdings long term. I want to go for that 10, 20, 50x potential. Some ways to do that is sell less in the beginning and have a higher weight at the end. And you can do that by lowering the percentage that you're selling in the beginning and maybe make it heavier at higher prices. And then of course even raising those prices. But that also comes with risk because there's no guarantee that it reaches those higher targets. But by playing with the numbers, assessing a project's potential, and then even aligning it with your own goals, you can find out what works for you. So in this example, we're selling at 20 cents, 50 cents, and then the rest of the holdings, since everything else is house money, we're trying to hit a home run. And with this exit plan, this is 4,700% or over a 47x, but remember, we still have 25% as our long-term holds as well, which I'd be staking long-term to earn more CSPR. And you can do all of these calculations in a free spreadsheet, but I'm using Merlin, that way I never have to update my holdings, everything is connected to APIs and wallets, and it's just truly automated. And the best part is I have my exit plans ready for every single one of my holdings. You can play with a conservative case if you think we just get a little retracement or even an all-time high in a bull run. So this is how I structure my exit plan. So target 1 is at least the initial investment. If I'm even more bullish, I try to get some profits on top of that. So I at the very least want to recoup my initial investment here, if not some profits. And that way, all remaining targets, target 2, 3, or 4 if I have one, are complete house money. During a bull run, you get your initial investment out or even some profits on top of that. You're in a clear state of mind. You're not doing emotional trading. You're just in a really good mindset. For conservative people, this could be after just a 3 to 5x or well over a 10x if you're really that confident and you're trying to make as much money as possible. Now, if target 1 is too conservative and it's only a 2x, you're really cutting your potential ROI massively if it does go higher. But if your target 1 is way too high and you're looking for a 20x return, you might not ever get that target. And then you missed a huge opportunity to take profit, potentially buy back, improve your position, repeat the cycle. Some of my assets are high caps, it might only be a 3 to 5x, but with my lower caps, I'm looking at a much higher return before I even get my initial out. Target 2 is about getting partial profits, and this is pure profit, and you're also reducing exposure. As prices are going up, you're staggering out, you hit it, you're happy, and you're able to buy back lower now, you have liquid cash to improve your position, or you can invest that money elsewhere if there's a better opportunity. And target 3 is securing even higher profits or a better ROI than target 2. And again, you're able to reinvest lower or grow your funds elsewhere. And target 4, if you have one, maybe it's that moon scenario or it's the highest Fibonacci extension you see that's realistic. Or maybe you don't have one and you just have long-term holdings. You're securing the highest level of profits in terms of ROI. And you can sit liquid, you can put that money in the bank, you could pay off a car, and you got a huge win even if prices go higher, because during a bear market, whether it's a year or 2 years later, you're gonna see a 50%, maybe even 90% plus crash. Now, if all of your targets hit, you absolutely crushed it. If only 1 or 2 hit, you're still in a good position, you can buy back, accumulate even more, and now when you reset all of your targets 1, 2, 3, or even 4, you have much higher ROI potential during the next bullish cycle. The worst case is if your target 1 was too high and it's never even hit. So no matter your view on the market, for me, hitting at least that target 1 is super important. If it's ambitious and it's a low cap and I just believe it's not even close to being adopted as a strong community and it's going to be growing in the future, I'm aiming for well over a 10x, maybe even a 20 to 50x. If every single target is hit, and that's not guaranteed, so even if some of them are hit, I could still get that 10x. So I absolutely love Merlin. The team is working on some really cool updates as well. And I can decide based on my exit plan, am I conservative, am I super bullish? Do I want to put a higher percentage selling first to get out and de-risk, or do I want to ladder it out and put a higher percentage sold later at potentially a much higher price? And any investors that came into the market new to crypto and bought near the top of the bull market in 2021 before our assets crashed and we had one of the worst bear markets in history, an exit plan is absolutely essential. There are huge benefits of planning ahead and having clear goals. This helps prevent the constant changing of your mind during a bull run when prices are going up. You're going to say, oh, what if it goes higher? What if it goes higher? You move your targets up and the prices may never come. And during a bull run, people are going to be hard on themselves when they sell and the asset keeps pumping. If you're in profit, it's still a win. And exit plans, or even crypto in general, is not popular during a bear market when assets are at lows, everything's crashed, there's been bad news nonstop for 2+ years. But after being in this space and living and breathing this stuff daily since 2017, I know that bull runs are going to change everybody's mind quickly. So I hope you guys enjoyed this. Check out Merlin, linked in the video description, and I will catch you in the next one.